something you love, you don't know when you do so much. But thank you so much, Bumper, for having me here. And lovely to see all 222 people. I'm looking forward to having an amazing session, a very practical session, and make tax very simple and not something scary after this class. I have 45 minutes, so I will try and do all my talking and explanation in 30 minutes. So by 4:30, I'm hoping, fingers crossed, to be done with my explanation, and we would have 10 to 15 minutes of questions, because I know every time I have a tax session, there are a huge number of questions, and I'm sure you guys already have questions before you join. So just jot it down. If you have any questions or any clarification from anything I've shared so far or as I'm sharing, please jot it down so I can go through everything. You might get the explanation or the answer to your question before I finish. So 45 minutes might look like a long time, but for tax is very short. So I'm going to try and address two major things today. One, what are the key things you need to know about the new tax law for your company, for staff, and generally, and also addressing some industries. And then the second thing I'm going to be addressing today is what you need to do to get your business ready. When I got the invitation to speak today, I was like, this is a very fantastic time, because just before January ends and you start filing your VAT, withholding tax, and all those lovely stuff for the year, you get this training and you get yourself ready. So without further ado, let me share my screen. Do I have the right to? Okay, yes, I do. Okay, so I'm just going to jump into it. I hope everyone can hear me well. Please confirm that you can hear me. We are starting the real matter for today, so I have to make sure I can hear, or you can hear me. Okay, fantastic, loud and clear. I love that. Okay, so let's start. How do I do this? Okay, fantastic. So today, like I said, we're talking about the new tax law, right? And my name and everything about me has been shared before, so I'm just going to jump right into it. So what is it we are going to be talking about today? One, you want to know about what the various tax bodies are. You want to identify the key changes and how to structure your business. So let's jump into it. Now, there are, what happened? What is my, what is this foreign language? We use, okay. So, yes. Let me share it again. Sorry about that. I don't know why my slide decided to change its language. I was changing it again. I don't know what's happening with my slides. That was good 5 minutes ago. But anyway, I don't want to focus on that. I'm going to work on it and share the right one. So we have 4 major bodies that has been created with the new tax law, right? So the first one is the Nigerian Tax Authority. The first one is the Nigerian Tax Authority, and that is the one that provides everything that governs the tax law. So if you want to know what's really the legislation that governs the tax law, you can go and download the Nigerian Tax Act and you will see that. Then we also have the Administrative Act. So this is the one that literally helps, just like the name, helps to administer all the tax regulations and laws and standards and all that. It helps to regulate it, and it helps to also show the procedures that the tax law would take. So if you want to know step by step what to do, you want to download this law. Then we have, I'm sure most of us will have heard NRS, which is the change from FRS, right? What we knew before was FRS, which is the body that actually implements the tax law. So who you will be seeing day to day and front facing will be NRS, which is from FRS, all right? And then we have the Joint Tax Board. That is the one that if you have any issue at all, maybe NRS took your money, the deducted tax is supposed to be, there are some overpayment, all those things, anything that has to do with the tax law, whether it's the NTA, the NTAA, whatever you want to implement, is a Joint Tax Board that would do it. We are currently having the annual LRS or FCTRS, wherever state filing that is going to be done for 2025. And you would have seen on the form, if you are filling it yourself or you have seen the form, that one of the columns there is the joint revenue board or joint tax board tax ID, right? So this ID is normally what individuals would be using. But for now, considering that things are just kicking up, it is not in effect yet, okay? So these are the 4 major bodies that the tax or the new tax law are going to be implemented through. So now, what is happening to us? Lord have mercy. Okay, today, my slide is trying to do its own thing, but we'll walk through it. I don't understand the English that is converting my slides to. So now, what are the key objectives of this new tax law? I like to always talk about this when I'm talking about the new tax law, because it helps you to frame your mindset on what the tax is about, right? Or it helps you to know what you are supposed to expect from it. We are all human beings and we are flawed, but at the same time, we have key objectives that this tax law is trying to achieve. And one is to make sure that all the different tax law, if you have been into tax for anything more than 6 years in the last year, or 6 months in the last year, you will realize there are a lot of taxes that they will tell you to come and pay. Whether it's the local government, the state government, is your community, is the market, is the federal government, there's just one tax or the other they are trying to get you to pay or to tell you that you have to do. And even in one, let's say FRS, you have multiple taxes that you have under that, right? Even for us or for me as a tax consultant, I'll tell you sometimes it can be a lot to catch up with. And you find yourself arguing with the FRS officers when I go for audit, because I'm like, since when did this one come into effect? Because they're always bringing out one thing or the other, right? So this new tax law is helping to bring everything together so that you are not paying multiple taxes. Like, for example, we had development tax, we had capital gains tax, right? All this has now been put into the company income tax. So you don't have to calculate police tax, development tax, company income tax, and all those plenty tax when you are a limited liability company. Everything has been put together. Also, it helps to create fairness and equality, in the sense that the way the new tax law has been created, even like for individuals, is those that are earning more that will pay more. If you are earning less, you will not pay at all or pay little. I'll give you an example. Just this evening before this evening before I came on the call, I did a revised payroll for a client who we have been working with for 2 to 3 years now. And for all the staff that was on the payroll, these staff were paying payee before. But now with the new tax law, only one was paying payee, and that person was paying very, very small, right? So it really helps that more money is left in the pockets of people who are earning less. All you just need to do is find how you can compute your tax for your staff, or speak to us and let us help you to know how to compute tax for yourself or for your tax. It also helps you to be compliant. I always have this question. I'm going to say it also when I start digging deep, but the fact that you are a registered business and you are not making up to 100 million or 50 million, as the tax law has said, does not mean you would not file. You still have to file. I always say even NGOs have to still file. So as a business owner, you need to know what is compliance to you and what is not compliance to you, right? And when you are now filing your taxes, I'm going to explain all that, so don't worry. When you are filing your taxes, what does it mean to file your tax? Don't just go and say nil, because I get that a lot. You've made money in the month. Yes, it's not up to 25 million for the year, but you need to still state what you have made, so that everybody is clear. Because if you don't do that, you will not be compliant, right? Then we are also talking about digitalization. Every business, even before FR started talking about digitalization, I always say to businesses, please, the era of book and pen is far gone. You cannot live on that. That can be your information stopping gap, but that should not be your final information. So what I mean by that is that you can say, oh, I've made sales for today. I'm just writing it down. But you have to transfer that information to an Excel, to a Google Sheet, even if it's phone notes, or even WhatsApp message, but put it in a soft copy so that it is easily retrievable, and it does not, how will I put it? You will not lose it. You can always tell people, especially people who their staff are the one doing the recording, and these books or paper and pen, they are out in the open. See, it just takes one drop of water from a cold bottle of water or Coke to destroy that whole book. I'm telling you. Or somebody is eating and they splash oil. That's the end of that information. And maybe you wrote 58,000. 8 is spoiled with water. That whole information is gone, right? So you always need to look at what you are doing to make sure that at the end of the day, your information is correct, okay? Can you still hear me?
Yes, we can hear you now, ma. You went off for a minute.
You can hear me now. Fantastic. I lost sound for a minute. Okay. So now let's go to the next thing, which is, I would say, the meat of the matter. So these are the key changes that have happened in the new tax law, right? Before I go there, I want to explain some foundational information. One, the 3 tax bodies that you as a business has to be concerned about, right? The first thing is, the first one is CAC. CAC is where your business was registered. And if you are running a business and you do not have it registered, whether it is an enterprise, limited liability, partnership, NGO, whatever, but registered, that is when people start taking you seriously. And that's where you can now start separating yourself from your business. Very important. So CAC, when you register with CAC, 18 months or the next year end of your accounting year. So if your year ends in December, the next year, December, you have to have done your annual returns. So you pay a bit of fee, very small, and then you file. You can do that with a lawyer. You can also do that with us. So that is CAC. Every year after 18 months, you do that. If you don't do that, you stand a chance to be wiped off CAC and you'll be transacting illegally, right? So that's the first one. The second one, I would say FRS, now NRS. This is where your VAT, business or individual withholding tax, company income tax, if you're a limited liability company, is registered, is filed. And you have to first get a TIN number. 2, you have to register on Tax Promax. And 3, you have to make sure that you have a VAT letter or VAT certificate, right? This is the letter that FRS, now NRS, would write to you to say this is your number, your company name, and all those nice stuff, right? And then Tax Promax is the platform where all taxes are filed, remitted, and recorded, right? So what do I mean by filing? Filing means telling NRS what kind of sale, in terms of what did you sell, how much did you sell, which period did you sell it in. In Tax Promax is when you do that, right? So that's filing. So even if you are not making up to 25 million from last year, or now 100 million, 50 million from this year, then you know that you have to still file, right? You don't say, because I'm not making up to that, I'm going to leave it, or I'm not registered with Tax Promax, because there are penalties, which is 6 months after you have registered with CAC, you are supposed to register with FRS and get your Tax Promax login, even when you have not started business. Because when you are doing audit registration, there's a part you will state whether you have started business or not. So please, people of God, if you have started business and you do not have your TIN registered, please go and do it. You can also reach out to us if you need to do that. So you might have gotten your TIN on your certificate. That doesn't mean it is registered. You still have to go to NRS and register. With the current tax law, in fact, last week, we were trying to register a client, and we realized that it has to be taken to Abuja. So any business that has been opened on or before 2023, the tax office in your state of business cannot register it again. Abuja would have to be the one that will verify you. So the best thing to do is to make sure that you are registered on time and you are as compliant as possible. So that's the second one, NRS. The third one, which you also need to think about is your state tax. I'm not sure where everyone is located, whether you're in Lagos, Abuja, Rivers State, wherever you are in a state, right? There's a state tax for that. And the state tax, you have to talk about yourself, your staff, contract staff, professional, people you work with. You need to have tax for them. So what do I mean? For yourself, as a business owner, you will need to file your tax with the state every year. In fact, it's coming up soon. On or before 31st of March every year, you need to do it. But please, I beg you, don't wait until that time. Ensure that you register before. In fact, latest February, you should register, because that time is going to be a big rush. Then your staff, which you call the payee, pay as you earn, you also have to sort out your staff tax, right? So if you have staff salary, but you don't know how to compute whether they're exempted or not, how to get tax ID for them, and you're in Lagos or Abuja, we can also help you with that, right? Also, when we say WHT or withholding tax, what does that mean? It is the tax you hold back from people you pay, and you pay the tax on their behalf. So, for example, if withholding tax is applied to rent, whether it's your office rent or rent that you do for the business. So when you are paying your rent, you hold back 10% of that. You pay the landlord 90%, right? And then that 10%, you use the landlord's tax ID or the company's tax ID for the landlord to pay that 10% on their behalf. So that's what withholding tax is, okay? So now that we have these foundation of tax, I need to move my phone from here. So sorry with this noise, right? Now let's talk about the major things. So medium-sized companies remove only small and large. You know, before we had a graduated scale where we said at this rate, for small businesses, this is the rate you charge. For medium businesses, 25%. For large, 30%. Now we only have small and large, right? So any company that is having more than 50 million of revenue and their assets, their fixed assets, mind you, does not exceed 250 million. So these two terms has to apply, because if you are making above 250 million, above 50 million, and your asset is less than 250 million, you are a large company. If you are doing above 50 million, but have your asset less than 250 million, you are still a large company. So for you to be a small company, first you have to be earning below 50 million and your asset is within 250 million, right? There are some companies that even just one asset is 250 million. Those companies, of course, are large, right? So if you are a small company, a small limited liability company, you would not be charged company income tax. But if you are a large limited liability company, you would be charged 30% of your profit as company income tax, right? And mind you, I'm using the word limited liability because we also have business name or enterprise, right? So irrespective of how much you are making as an enterprise, company income tax does not apply to you. Just VAT, withholding tax payee applies to you, okay? Then allowable expenses must be relevant, wholly and exclusive to the business. What does that mean? So if you are spending, let's say, 20 million on travel expenses, and your income, I'm going to explain what income means. Your income is, let's say, 20 million. Meanwhile, you are spending 15, 20 million on travel. That is not a relevant expense. Why? If a business wants to truly make a profitable decision, you cannot go and buy, let's say, first class ticket for a business that is struggling, right? You cannot say you want to do charity and your charity is far more than your profits, right? So relevant, then wholly, using flight ticket again. When you flew to China to get your products, the 5 days you stayed in China, was it strictly for business, or you did 2 days of business and 3 days of holiday, shopping, sightseeing? So it has to be wholly, right? So if you've bought the tickets and you know that some of the days you are going to be there, your hotel, your feeding, your flight is going to be personal, it has to be assigned. That's what the law is saying. Then exclusive means that it is solely for it. The sole purpose of paying for your staff salary is strictly for them to do the business work and for that business. I know we Nigerians, we are very entrepreneurial, right? And you can see one person that has multiple businesses. They are selling shoes, they are selling hair, they are doing travel agency, they are doing real estate, and they have all these businesses. If you have a staff that is working on all 4 businesses, it is no more exclusive to one. So one cannot bear the full cost of that staff. So I'm saying all this because when you get to documentation, you will see that you have to have a document that shows that it is relevant, it is wholly, and it is exclusive, right? There was a client who reached out to me, I think second week in January, and says, oh, I have 3 businesses. I want to get this class of staff, and I want the staff to work across 3 businesses. I said, okay, so what's the money come from this business? The other 2, are they contributing to the business to pay the salary? I was like, no, the other 2 are struggling. I say, well, you cannot put in the job description of this staff that they are going to be supporting the work of the other 3. You have to be silent on that, because if you do that, that means the staff salary is no more wholly and exclusive to who is paying. So the taxman is now going to only allow the percentage of what that business is supposed to pay for. Okay? Then, oh my God, my time, and I still have a long way to go. Jesus, help me. Okay, so now central bank rates form the basis for foreign currency expense allowable. What does that mean? As a country, I believe somehow it's changing a bit, but we basically almost import everything. So as a business, you're producing, you're selling foreign items, whatever you're doing. If you are buying things abroad, the rate of what you are buying in the currency you are buying has to be the central bank rate, not black market rate, right? Because you could have exchanged money from the let's say Aboki or the people, the forex guys or ladies. I think ladies do that now, I'm not sure, but you get the exchange done, but you cannot use that rate of black market if it's higher than central bank rate. It is not allowable. It would be added back to your profit and taxed, especially for limited liability companies. So this has to be communicated to your accountant. When you are doing your bookkeeping, you are doing your accounts, please take note of that. I'm going to try and speed up. Research and development is allowable to the maximum of 5% of annual turnover. Annual turnover is simply saying your total sales. Your research and development must not be higher than 5% of your sales or 10% of your profits. If it's higher than that, the taxman can add the balance back and tax it. So if you are into research and development, you are trying to do tests for products and all that, you're trying to get your mix of product, because I have a client in skincare that actually produce their skincare products. So in that research and development, there's a cutoff for you to do. So you have to always be looking at the amount and tracking it and make sure that in a particular 12 months period, your total research and development does not exceed that. Exempted to zero rated. So these items were exempted before, now they are zero rated, which means that let me explain this. When something is exempted, the tax compliance does not affect it. But when something is zero rated, means that the VAT is zero. So everything that has to do with tax filing affects that business. So let me give an example. Basic food items like raw meats, not cooked meat, raw meats, raw fish, raw yam, raw plantain, water, things that everybody would eat, right? Not processed. Those were exempted before, so no tax was on it. But now it's zero rated, which means that any person that is selling this kind of items would be taxed, but it will be zero. So when you are looking at your invoice, make sure you put it at zero, not no tax at all. And then you need to state clearly what amount of sales came from those items, right? I see people who sell raw meat, raw fish. They also sell processed, peppered meat, peppered fish. No, not peppered fish. Peppered turkey, beef, chicken, whatever, right? So you have to know which one is zero rated and which one is taxable, because the cooked food is taxable, right? So all these items are now zero rated. Okay. Let me run. Tax planning for tax maximization has to be disclosed. So if you are planning your tax and saying, oh, okay, so I'm going to put this money towards research and development so that it is not taxed, or I'm going to put this money towards charity, or I'm going to do this, I'm going to do that, it has to be declared according to tax law. Tax authority to respond to your objections. So if they write to you and you respond and say, no, this is not my sales, this tax does not apply to me, or whatever, they have up to 90 days to respond to your objection. If not, your objection will stand. Also, VAT refunds within 30 days, right? So if, for example, for any reason, maybe you were paying your tax and you doubled tax or you paid wrongly, it has to be refunded within 30 days. Okay? The other thing I want to say about agriculture business is that you are exempted for the first 5 years from commencement. So commencement is not the same thing as CAC registration. What do I mean? If you register your business in 2020, right? Of course, by then you should get a team, register with NRS now, and Tax Promax. But you did not make any sales, you did not do anything with the business until let's say 2023, 2 years after. And then it's in that second year after your registration that you start making sales, getting staff, getting a space, doing all those things. The 5 years starts from the 2 years after. So 2020, you registered your business. 2023, you started business. Your five years starts from 2023, right? If you have been in business and it's more than 5 years, unfortunately, that does not apply to you. Okay? Again, let me see, is there any other thing? Professional service, of course, if you are providing professional service, please know that the exemption does not apply to you. Whether it's the 50 million, 100 million, before you start, you charge VAT from day one. You charge VAT to everybody. You pay VAT. You do all your filing. You do all the tax exemption does not apply to you and me, unfortunately. So exemptions of gains from disposal. So if you have a property, a house, your family members, this information is also important for them. They sell their property. They can only get an exemption from the income they've gotten from selling their property for just one property. If you sell multiple properties after that, those income would be taxed. Then donations, CSR, charity, and all that is allowable, but to a maximum of 10% of your profit before tax. So what does that mean? If you want to, I get a number of people say, I want to give money to my church, I want to sow a seed, I want to give offering, I want to give my widowed or mother or uncle or auntie, I want to support this charity that is dear to my heart. All good and fine, but know that you cannot do above 10% of your profit before tax is computed, right? Please always track that and make sure that you are not above that, because 10.1%, the 1% will be added back and charged. Okay, so be careful on that. Okay, so I'm going to run. My time is far spent. So non-allowable deductions, loan interest from foreign or local related company. So I get this a lot where people say, oh, I want to try and manage my tax. I'll get this company to buy from this company at a reduced price, and then the profit will now be all done fine, but there's a restriction, right? First, if let's say company A, you own both companies, but company A is buying product from company B, the selling price cannot be so far above what is the standard or acceptable price. Let's say you want to buy water, and water is normally sold at, let's say, 1,000 naira. You cannot say, oh, because I want to move profit from this company to the other company so that I don't pay more tax, I'm going to charge it for 5,000 naira. It's not going to be allowed. The same thing with loans. If you are giving loan from one company to the other and you are charging interest, there's a limit to it. Okay, so please, if you have multiple companies trying to manage your tax, please be mindful of that. And then expenses on items that are tax exempted and are not paid. So if you made an expense, right? Let's say you are producing smoked meat, right? You are producing smoked meat. The raw meat that you are using for your production of smoked meat is not taxable, but your cooked meat that you are selling is vatable. You cannot now say you did not pay VAT on raw meat. You now want to assume there should be a tax and deduct it. It will not work, right? Then bad debt restructuring for related companies. So if, let's say, you own, again, both companies, and one company loaned the other company money, and then you now say, oh, it's bad debt, you cannot collect the money back. If they are related companies, you cannot write off a bad debt or restructure it. Okay? So let me move. Is there anyone that is operating from a free trade zone? So that I explain that, and if not, I can just move on. It will not be necessary for me to spend time on that if nobody is there. Okay? I'm not seeing any hands, so I'm going to assume there's no one and then move on. So one of the taxes that is very common and affects almost every business, because if you are a business owner or you have staff in a business, I'm sure you are here because you own a business. So if any of those things apply to you, this will be very important. So we have the old tax rate, right? So right now we are doing our annual return. So the old tax rate is what will be charged. But we also have the new tax rate. So the old tax rate still graduated scale where you have the first 300, next 300, next 500 at a different percentage. Then we also have the new tax rate where we have the first 800 and that. So let me explain what this graduated scale means. It means that you have done all your deductions, so the allowable rent. So now with the new tax law, that 20% and 200,000 allowable deduction no more applies. You have pension, you have housing insurance, you have a life insurance, and all those still allowable. But now you have rent. So if you are paying rent and you have a rental agreement, you have rent receipt in your name, right? Please, I hear people say, oh, rent is allowable, so I'm staying in a house, I'll just go and get. No. The rent first has to be within the timeline of the year you are charging tax on. 1. 2, you have to have a rental agreement. So please go to your landlord or your real estate agent to get you a signed rental agreement that has your name the way it is in when they pay you salary, how your name is. It has to be like that. Then you have to have paid rent in your name. The alert or the receipt of rent from your landlord has to have your name. So these 3 criteria has to be met for you to have the rent allowable. So it is 20% of your rent amount to a maximum of 500,000. So even if, let's say, you are paying 5 million in the year, the maximum can be only 500,000. So after you have deducted all the allowable deductions, the remaining amount is where this tax bound now comes in, right? So with the new tax law, if after the rent deduction, the pension, life insurance, health insurance, loan on the property that is owned, all those deductions are done, the remaining amount, if it's less than or equal to 800,000, you pay no tax, right? But anything above that remaining amount, above 800,000, that's where your tax lies. So let's imagine that the remaining amount is 1.5 after all the deductions, right? Is 1.5. 800 from that amount will not be taxed. The only amount that will be taxed will be 1.5, that will be 700,000. So that 700,000 will now be at 15%. I hope you're getting what I'm saying. So that is how we apply. So after you've done the calculation, I got into 2.2 million. The next one is 9 million. So anything above that, you keep going. So that's how the computation works with the new tax law. Okay. My time. So this is very important. So I have to run through it before I open the floor for questions. Okay. Only God knows what happened to my slide, but because I seriously do not understand why my slides are changing to another language. Please allow me a second. Let me change this. I think it's okay. Apparently did not change. Okay, so these are the things that you need to think about when you are trying to prepare your business for tax, okay? So the first thing is this, I will recommend strongly. You onboard all your staff and let them know what is coming or hitting you guys with this new tax. So now you have learned this. I believe you've taken notes. When the question time comes, you ask questions. Whatever you have learned, you need to go back and train your staff about what is going to be happening and as it relates to your business. That's the first thing. The second thing, you need to do all your registrations, because I will tell you one thing, you might not even have to pay 1 naira or in fact 1 kobo of tax. But if you are not properly registered and you are not filing properly, penalties alone can be more than the tax that you have to pay. Right? So make sure that you're registered with Tax Promax, you have your VAT letter, registered with the state, your CAC annual returns is done, right? So those things you need to do. Secondly, and very importantly, right? If I've said anything today that you've forgotten, this one you cannot forget. Record keeping. Every 50 kobo that leaves your business bank account has to have a supporting document and has to be filed. So I have situations, of course, we have situations in Nigeria where you give money to a staff to go and pick up something using keke or a bike and all that. You cannot have receipts. But you have bought something or they've gone there for a reason. You send money to your staff. You have to keep what we call a petty cash record, because those monies will be like 500, 1,000, 2,000, 2,500. But believe me, they add up very quickly. No money should pass through your accounts, in or out of your accounts, that you do not keep records of. So that's expense. Now with income, please register yourself or reach out to us to get yourself registered on an accounting software. Get an accounting software that you can get invoice done, no matter what you are doing, product or services. Please have invoices done. And when you do the invoice, make sure you do receipt. The receipt should match where the money is coming from, how much it is, what date is coming, so that it is properly reconciled. It makes your accounting easier, right? So please, if you need a bookkeeping template, again, reach out to us, okay? Then this is very important for all companies, but for limited liability companies, where if your expense is disallowed, it will be added back to your profit and taxed. I am currently in an audit that the audit is asking for a tax payment of over 500 million. I'm not even joking, right? And the reason why they are asking for this is not because they cannot see that the business actually spent the money for what it says it has spent the money for, but they want the proof that they actually spent it. So let me give an example. Flight tickets. Please keep the proof of the flight, and the person who is flying must be a staff of the company. If somebody else's name is in that document that you get from the flight ticket as itinerary or all that, it is going to be disallowed. It cannot be paid by the business. So one, it has to show the name of the flyer, how much you've paid, when it is paid, and it has to match your bank account. Okay, so make sure as a limited liability company, you are keeping all the information that you need to have. Okay, and then have financial reports. What do I mean? Profit and loss account, balance sheets, cash flows are financial reports. Of course, you don't have to prepare it yourself. Get an accountant to prepare it for you, but review it. See how you can maximize the allowance that you have, right? How you can take advantage of the different things I've said before, that it can help you to ensure you are cutting your expenses and managing your tax. And lastly, make sure that your taxes are filed on time. You will not believe it, but in 3 months, you can get up to 300,000 as penalty alone. That's if you have no tax to pay, you are exempted, you are below the threshold, all those nice stuff. You can still have a liability of penalty of up to 300,000 in just 3 to 4 months. So you can imagine how much your tax liability that you have no tax to pay can increase just because you are not compliant. So here are things I want you to think about. How do these tax reforms affect me and my business operations, right? I always say, in quote, mind your business. Mind your business in the sense that focus on what affects your business. If you are not in oil and gas, seriously, it doesn't affect you. If you are not in food business, it doesn't affect you. Focus on what affects you and then structure your documentation to suit that. Then, how do I determine the impact of this reform and stay ahead of it to minimize the disruption to my business, right? You want to ask yourself this question. Okay, so what do I do to make sure that before the deadline of VAT filing or payee filing or payment, I have filed to avoid the 50,000, 75,000, and so on that can pile up? And how do I prepare for these changes? I've done some recommendation, train your staff, get a software, get an accountant, get someone like us who is an accountant and tax consultant on your speed dial, get bookkeeping templates, make sure your staff is well trained on how to keep and store information, right? And the last thing I would say you need to reflect on is, how do I minimize cost of compliance and undue tax exposure? How you want to do that is the same thing, documentation and filing, but you have to put structures in your business that would help you, because you cannot be thinking about everything all the time just by only you, right? So I'm going to stop here, and I hope that I have helped, even if it's a bit, and you have a bit of clarity from attending this. I know I have overshot my time. I'm so sorry. Does anyone have any question? Thank you for the claps. I appreciate it. I see it. Thank you very much. So I'm here for any questions. Thank you.
Thank you so much, Ma. This was such a great session. There was so much to learn. Thank you. Definitely. So we can take one question. Somebody is asking, how can I file for tax and when is the deadline for filing?
Okay, tax is a very broad subject. So like I've said, we have CAC, and that depends on when your accounting year. So if your accounting year is December, when I say accounting year, where is your year end? January to December? Is it February to January? Whatever that is. So you would file that. VAT is on or before the 21st of the next month. So if you want to file VAT for January, on or before 21st of February, you should file your VAT. Then payee, which is the staff tax, is on or before the 10th of the next month. And all these taxes, they have a platform where you can register. If you want to, I know I don't have much time here, but if you want to maybe ask me further question, I think I have someone here who can share my information, if that is allowed. And you can send me an email so I know exactly. Or what's the name of the platform? For FRS or NRS is ETAX, is Tax Pro Max. For Lagos State tax is ETAX, and then you have the CAC platform. Yes, weight loss brands, it is vatable. You are not exempted. Okay, I think I have my slide with my phone. Any other question?